Hey, welcome to the Chinchilla Picking Podcast. Dave is out this week, and right now we have a special guest from our friends over at the Money Vikings. Bob, how are you doing?
Doing great, sir. How are you?
Doing great. Haven't been feeling good today, but we're going to power through it. When you've got a new podcast, it's very important that I think that you get your podcast out on time, you maintain momentum, and you don't lose it. So
yeah, you gotta take some vitamin C and some herbal tea. You'll be good.
My girlfriend like an hour ago came in with the vitamin C and some sparkling water.
She knows what she's doing. You're good.
Yeah, she does. I'm in good hands. I love your guys' website. I love your podcast. You guys talk about just about everything. You were diversified in your investment advice. And best of all, it's free. I mean, I see so many people say that they're wanting to help, and then you get to their website and there's a paywall. You guys don't have that. I love that.
No. Thank you.
Oh, you're welcome. Yeah. And yeah, the Money Vikings podcast, the moneyvikings.net. I recommend that everybody goes there. How did you guys all come together and come up with this idea?
Well, so my brother and a good friend of ours, so Greg and Jerry on the show, they started some years back, and the idea was, things that they enjoyed doing, and it was Dungeons and Dragons, and it was investing, right?
Right.
And they had so much experience and knowledge in those realms that they wanted to kind of share that things that worked with them and ideas they had, what's gone well, the pitfalls, and they wanted the everyday person to just be able to take control of that and work towards the goal of having that kind of financial freedom, right?
Yeah.
And for my brother and I, we've been around investing our whole lives. Grandparents, parents, and whether it's property, real estate, or the market. And I was really involved in it at a really early age, and it wasn't until a year or so ago that they wanted me to just come on the show, and when they finally launched their podcast and kind of make an appearance, and then it just took off from there. Once I did my first show with them, I kind of got an itch, and it was fun. And then when we started seeing the stuff with the pandemic and the retail investors and whatnot being involved, I really took flight to investing and got more hands-on. And it just took from there like wildfire. And it just came kind of a thing that we owe to people, is that to share experiences and knowledge and whatnot, because I think it is important for us as retail investors and people to be in control of our money and not necessarily rely on somebody else in good faith to do that when they may not have the best of intentions. So that's where we are now, and it's just it's only up from here.
Yeah, awesome. You mentioned, I think it was you that mentioned that you were kind of in the art world for a little bit, right?
Yeah.
Do you find some parallels between buying and selling of art and kind of stocks as well, like the buy low, sell high kind of thing?
Yeah, I can see the parallels. Both my brother and I, we both do artists, different styles. He's a kind of a illustrator in the sense of painting and whatnot, and caricatures. And then I actually do illustration in the sense of graphic illustration, web design, graphic design. And so we have our things, and I definitely see the correlation, right? I mean, everything is an investment. Well, I don't say everything, but most things out there are investments nowadays, right? And I think even with this latest kind of boom of the NFTs, right, the non-fungible tokens that we have related to the cryptocurrency, it really has brought to light profitability for artwork. As ridiculous as it may be in these cases, but there's definitely a correlation there. I mean, people are trying to make money and prosper.
Yeah,
Absolutely.
It's funny because prior to the Great Recession, and prior to me becoming interested in investing in stocks and stuff like that, I was, and still am to this day, like interested in antiques and collectibles. And I think
Cool.
much like art, like that's one of the first things that goes. It's very discretionary, and it's one of the first things that drops when a recession hits.
Yeah.
But they drop in price. But much like stocks, if you've got your money saved up, you can get some real good deals when those prices drop. And then it's one of the, they're one of the first things to come back too once the economy starts coming back around.
Now, isn't it funny though? Think about that. Is that when you talk about like antiques, in kind of a high level sense, it's like a barter system, right? You're in a way, right? Somebody will give you money for an actual physical, tangible item that has this value, right?
Mm-hmm.
And in the stock market, you're giving somebody money for essentially nothing. You're giving somebody money, the intrinsic value, right? You're giving somebody money for something that you see as valuable in a company, but in the reality, that it's kind of like a charity.
Yeah.
You're giving them money so their company can do more, and then you can take your money and then go buy some other product.
Right.
Right? Where it's very interesting how where antiques, you actually give money for something or exchange for something that you have a physical item, a collectible item that you can put on the shelf, people can see and touch and whatnot. So it's a very interesting dynamic.
Yeah, it is definitely. So how would you consider, like, how would you characterize your investment techniques?
Well, it's interesting because I have many hats in investing, but I think this is also part of being a successful investor, is that you need to definitely diversify. And when we talk about investing, it's not just the stock market, right? Property investment, that's actually one of the best investments you can make, is property. So we have property that we invest in and have portfolio of. And then when I go into the market space, I have a 401k, which is just, you feed it and you're not too active in it, right? Maybe I shuffle some things around, but I'm not day trading, swing trading, right? Those are more longer term plays. And then I have more of hands-on investment that I accumulated and control off of my own kind of research and actually these communities that I get involved with in Discord and online that have great ideas, I will invest in. And then I have that little piece, which is the play money. And the idea we always talk about is the play money is the money that you're willing to just lose tomorrow, and understand that.
Yeah.
If you make a bad choice, you could lose it all, and you got to be okay with that. And that's the money that I tend to get a little more risky with, playing on the knife's edge, and willing to kind of push the limits. But yeah, it's that diversification that actually helps essentially keep me safe in the longer run.
Yeah, it helps you keep a portfolio that doesn't give you too much anxiety, take years off your life, and.
I'm telling you, man. The thing is, like, it makes me sick to see some of this Wall Street bet stuff, because that's out there. They gamify, right?
Yeah.
Investing, and you have people who have genuinely taken life savings, college funds, money, like stuff that would have been great for them to build upon and actually change their future, and they throw it all in the casino, right? Yep. And it's just it's sad to see stuff like that, where you have people who were tricked into thinking that this is just a game, but it is an extremely dangerous game, the
Yeah.
stock market. And that mentality can burn you pretty bad. And that's, you know,
That's kind of what scares me too, watching these jumps in AMC. And
right.
when I get on Facebook and, you know, there's the Robinhood trader groups and stuff like that, and there's so many people saying to invest in this, it's going to go to $500 a share.
Yeah.
And there's a lot of people doing all right on it right now, but I think there's going to be a lot of people in the end that lose money. And it's hard to call, though. Like, it's hard to call when that's going to drop, when it's going to come back to reality for these meme stocks.
Right.
And I almost wonder if we're going to have a market correction or crash of some sort to flush all of it out. I don't know.
I think so. I think it's going to be part of it. It's very interesting. Yeah, because these stocks, at the end of the day, I think the thing to look at is that even though these things do get pumped, you get the short squeezes, sometimes gamma squeezes, and this occurs, you do still have some technicals and fundamentals in the system that try to slow it down.
Yeah.
And actually keep things on path. And I mean, to be honest, is like there still are fundamental and technical traders out there, right? Mm-hmm. And I'm pretty sure their pocketbooks are much bigger than a lot of these kids. Mm-hmm. And you know, it's scary. Kind of touching back on what I was saying before, is that you have a lot of these people who are very green and new to the investing game, that this is the most money they've ever seen in their life, right? In their own bank account. And they think this is all that happens. I just need to sit here and hold this, and it's going to go up. And it's going to keep going. And as long as I stay with the horde and do what everybody else is doing, I'm just going to keep making money, and I'm going to be a millionaire tomorrow.
Right.
And then it collapses. And the problem then is that it starts falling, you know, the house of cards, right? It starts collapsing, and they stay on the bandwagon, collapses more. They stay on the bandwagon a little longer, and then finally it gets to this point where it has actually collapsed lower than the money they started with, and they freak out, and then they sell.
Right.
And then they've just contributed to the sell-off, you know, the stop-loss rates. And, you know, and I hate putting it this way, but I'm sorry, it's not wise investing. You're not a smart investor by doing that. You didn't trick the system. You know, intelligent investors know when to take their profits off the table.
Yeah.
Right.
And they also know the difference between luck and skill.
Right. And that's the thing, is you're playing. It's like these people are coming in trying to play the lottery, right? Expecting everybody to be a winner. Right. And it's interesting to see that out there. I do love and respect these communities that do support each other, but in a sensible way, where you're providing technical analysis, you're providing things you're seeing. Like, this is very much of what we do with the Money Vikings, right?
Yeah.
And I'm big into the technical analysis and charting, and I will put stuff out there. I'm like, okay, this is what I'm seeing, but hey, I do want you to be mindful of this and that, right? And it's genuinely looking out for people to make wise decisions when they're investing, wise decisions when they're essentially gambling at the biggest casino in the world, right?
Yeah.
That's what it should be about.
You put a lot of good videos on
Thank you.
on there, and your technical charting and stuff like that. And on there, you've been bullish on Microvision. Me and Dave have been rather bearish on it, but we wanted you to come on and explain, like, your position on Microvision, what you see for its future. I think it's, like, for me, it's very interesting because for this year, I think projected revenue was like just over $3 million. But like I saw on Yahoo Finance, and I didn't dig too much in it, there was an analyst that was saying that I think it was for FY 2023 they were projecting for $300 million in revenue.
Right. Okay, so Microvision, here's the thing with Microvision is I think what people don't understand. There's many layers to this, but one thing is that when let's just use this example. I think is it NVIDIA or AMD? So somebody is providing a specific processor or chip that's going to be in the Tesla.
I didn't hear that. No, I didn't.
So one of them is going to be in the Tesla, and you go to buy a Tesla, right? Mm-hmm. You're not buying an AMD vehicle. You're not buying an NVIDIA vehicle, right?
Right.
That component that is created is a huge deal. It is a crucial component that actually makes the whole thing work and come together. Okay. Mm-hmm. So Microvision at a time did try to go down the route years and years and years ago of having these Microvision products. They didn't have all of the manufacturing components and production components in place to really put that product out there in the competitive landscape. So they narrowed down to expertise in certain areas, and this is like lasers and the micro technology, right? And at the time, they actually got ahead of the game. They were way ahead of their time, and you had companies that actually couldn't make products that would work around like the green laser technology they had and things like that. And so they wound up burning themselves for being, I guess, to toot their horn, being too good at what they do.
Okay.
And that caused kind of a collapse. And it took up until about a year or two ago where we started getting leaps and bounds in advanced technology in the way that we are starting to, move, where Microvision had relevance. And by that time, Microvision was really able to master their product, make it and this is any company's dream, is the best product for the cheapest price. And it's unheard of. And that's what they were able to accomplish. And this is what landed them contracts with like Apple and Sony years ago, and landed them contracts with like Microsoft for this HoloLens 2, and which they now have the government contract, the IVAS, which is for the military to use for augmented reality and whatnot. And they are able to create this technology, the MEMS IBR, which they have since in the past year, less than a year, been able to refine to, I believe, provide a 1440p video quality in a augmented reality goggle space.
Oh, wow.
Right? A small chip in a small space. And furthermore, they mastered this stuff. Well, the writing was on the wall for this company last year, where they hit hard times because they were so heavily invested in their R&D. And most of these really good companies do that. They heavily invest in R&D and they pump out really good products. Well, they had to put themselves up for sale because they couldn't foresee themselves going much longer. But it put the pressure on companies like Microsoft and Apple and Sony and Samsung and Sharp and all these companies saying, hey, this is our technology, this is what we're doing, we're up for grabs. And so it lit a fire. But they also saw that the component that they created for the HoloLens was actually pretty adaptable to many aspects, many different things and realms. They were doing short throw projection, interactive projectors, where you could project something down onto a table and put your hands out and it would sense it, right?
Oh, wow.
They were really advanced in that area. Then they saw, okay, well, you have autonomous vehicles, and they're using sensors and essentially is consumer LiDAR. Why can't we apply this to vehicles? And being that automotive LiDAR and the autonomous vehicle space is to be some odd multi-billion-dollar market in a matter of short years, they're like, we're ahead of everybody else in many aspects of this. Why not? And that's where they turned their focus. And so in this process of being up for sale, which was announced in early 2020, later on in the year, as we go to these shareholder meetings, they let us know that they are in conversations with some OEM companies, some top tier OEMs. Where top tier is like Apple, Microsoft, those Google. Mm-hmm. And the company was signing on board of directors, people that were with Google, who were with Ford and whatnot in that space. So with that, they really were able to put their nose to the grindstone and actually produce a product, an automotive LiDAR product that is so far ahead of the other companies right now that are in that space, where they are putting these bulky things on the roof of a vehicle that spins around and does 360 views, but they don't have the way of reducing its size to actually get it compartmentalized in a small space of a vehicle. And Microvision was able to say, okay, here you go. So here's something the size of like a cassette tape and a little smaller that can mount up underneath the rearview mirror, and it can outperform any automotive LiDAR in the industry right now. And not just that, we're talking about like multiple times outperforms and does it at a reduced cost. And they also have a product that can adapt to the native state of any manufacturer out there. They just put in the hardware inside of it. It's essentially a plug and play, where it doesn't need to recode anything. It actually reads the native code of what's put in it and communicates effectively. And so that's kind of where we're at now. And now that they've been able to provide this A sample, they call it product, which is the infancy phase stage of actual product that is working and good. They're already showing to be years ahead of their competitors with this. So that's where we are. That's why, the long story is why this company does actually have so much value, and it does kind of get me a little crazy when I hear people talk about the balance sheet, right?
Yeah.
Because my argument has always been this: Tesla was not actually profitable. It didn't have revenue, like it actually wasn't positive, right? Revenue until the end of 2019. Right. And they've been around for how many years?
And I'll be honest with you, I thought in the very beginning, Tesla was going to go the way of the DeLorean.
Right. Yes, absolutely.
So
absolutely.
I didn't see that. But you think right now that like Microvision, like the future of it justifies the current stock price?
Absolutely.
Okay.
And this is what I'll tell you is that to see other companies out there that are just solely LiDAR have a higher valuation of a company like Microvision that isn't just LiDAR. They are interactive displays, laser technology, they're in augmented virtual reality space, and consumer LiDAR on top of the automotive LiDAR. For them to be valued lower than these other companies, it just doesn't make sense.
No, that's true. I would agree.
And so that's where my kind of argument is to it, is that you have this company who has a massive patent portfolio in this area and space, because this is where they put that money, their R&D, and they've patented like everything under the rainbow. And it's shocking that they aren't over $40, $50 a share right now. And I will tell you, once this company does actually make that announcement of the acquisition of either it's their automotive LiDAR or the company as a whole gets acquired, I feel sorry for anybody who's not invested now. Like it's just going to be buy. You're going to be chasing it at that point.
It's a $2.94 billion market cap
right now. Yes, sir.
Yes, yeah. But you think it'll be like, so if another company comes in and buys it, they would probably pay more than that for it. Which, from what you're saying, it sounds like that could bring, like that could actually make sense for a company like Apple or Microsoft to do it.
Right. So the speculative view right now is that it could be a couple ways. You have Google. So this is kind of the perspective is that, and this is per Sumit Sharma over at Microvision, was the idea. They didn't want the company to be sold, or just the automotive LiDAR to be sold to just one automotive company. And that way, in doing that, the rest of the world doesn't get to partake, right? It's just this one company kind of monopolizes on that technology. And so the idea is if you go with somebody like Google, who has had this kind of partnership thing with Waymo.
I think that's right. Yeah.
Yeah, and if it were like Google, well, you think about like right now, Apple CarPlay, right, and Android, Play in vehicles. It's in like multiple manufacturers. Well, you have a company like Google that could provide a LiDAR, Google Vision is what maybe they brand it, and that can go to a Ford, it can go to a Nissan, a Toyota. Like those companies can all buy that, and then you've diversified. The best analogy he used was back in the day when airbags were required and started coming up and being required in vehicles. There were hundreds of airbag manufacturers at that time. Over the course of years, there were less than a handful that stood out, and less than a handful that actually survived it, to nowadays where there actually are only less than a handful of airbag manufacturers, and they are in every vehicle, right?
Yep.
It's a requirement. So it's the same idea, is that that's the blue ocean opportunity, they call it, right? Having something where the future is like a vast blue ocean. And so that's the blue ocean opportunity that Microvision has now, is they have been able to provide a superior product that is now getting validated, that they have this massive opportunity. And people need to understand, like, what does that look like? Think about how many millions of vehicles not only are out on the road today, but get manufactured. And to have that product go into millions of vehicles across the board is massive. It's huge.
Yeah. Well, and the fact that they were like, I saw their last quarterly report, and it seemed to be a very good turnaround from the prior quarters. And the fact that they've been able to stick around, because it does seem like they were very far ahead of their time. Right. And just the fact that they're still here, I think that does mean something. Right. One of the reasons why I kind of tend to stay away from stocks like that are more future oriented. Oftentimes you see new industries come up, and people pile into a whole bunch of new companies. Like right now, I would even say that could still be considered the marijuana business would be a part of that, right. Even. But oftentimes, most of those companies wind up going bankrupt or going broke, and
Absolutely.
A lot of the value gets destroyed. And sometimes, like when you see that maturing market, like by the time it starts to mature, the amount of money that gets destroyed and tossed out is more than the amount of money that gets made. But you think that Microvision has a big enough moat to survive that and come out on top?
Yeah. So here's the thing is because they did have to do a public offering, and they've done some now, right? Done a few. But they were able to get enough capital. So this is the cool thing, and I think needs to be pointed out, is that when the pandemic hit and back last year, they had to lay off a lot of people. They had to lay off a lot of people, and they dwindled down their company. So keep in mind, they were operating essentially on a skeleton crew and able to pull stuff off. They have been able to raise enough capital to not only hire back the people that they laid off, but actually add more positions to the company as they're expanding. And I do want to say that explains why they had the earnings per share was a -4 cents over, I think a 2 cents was the projection, was because of the hiring they had to do. And it wasn't mentioned, unfortunately. I think I'm shot them in the foot by them not talking about that. But that's amazing. I mean, and that's a huge thing for a company to go from damn near close to having to shut the doors to getting back to full operating, capacity, then some. And not just that, they also, I think it was the 2020 year end. I think he made a comment about how they had enough capital to cash in reserve to capital burn for 3 years.
Yep.
I think they had, right? And so it's just mind blowing, because they going from a point where they were damn near close to having to forced to have to sell, by Q4 or in Q4 of 2020 to that point, it's just massive. So there's I think there are a lot of people in their corner that we don't know about, and I think they are some top tier OEM companies that really are in support of what Microvision's doing, and they're heavily invested. And you sure as hell have a bunch of retail investors and people who do believe, and I am one of those that do believe in what they are trying to accomplish and what they have accomplished so far.
Okay.
So it has allowed for me to have a very heavy position in the company.
Yeah, and I mean, sometimes you do have to go deeper than the balance sheet.
Right.
I mean, like, when you see those public offerings, like, for some companies I look at it as a bad thing, but if it's done in an intelligent way where you're going to invest for the future, I mean, Tesla did it a bunch of times. JD.com is currently doing it over in China. Yeah. Like, that hurts earnings per share and it hurts equity. But over the long term, you have to look at, like, why are they doing it, and what kind of return they're going to get on that in the long term as well. So
exactly, because that's the thing is, you see these companies that do these public offerings, but they're doing it just to continue to do status quo, to just stay their course, and not. It's not like it's a grind to actually, like, get something. They're trying to get something out the door that is groundbreaking and is going to revolutionize a market, right? It's just to go status quo, and weather a storm.
Now, AMC's been doing it for a totally different reason, and you can tell that they think they even know they're overvalued right now.
Yeah,
and they're just trying to take advantage of it.
I will tell you though, this is one thing. I'm glad you brought this up, because this is one thing that kind of. It drives me nuts, is that so the whole thing that happened with GameStop with GME and Melvin Capital and whatnot, that brought a huge issue to light. And with that, companies even Microvision does this, but companies started putting default verbiage, just legal jargon, in their prospectus, talking about how they have a right to make public offerings. They have and essentially based off things that shareholders voted on and agreed to, and also they have things that they talk about. It's kind of like this: I can neither confirm nor deny that you're going to make money by investing. Right? It's high volatility, high risk, and and this became default verbiage. And what happens, these people who are bearish, people who are short on stocks, and it's not just AMC, they will find that verbiage, they will write their op-ed piece and blast it out there, only after they've kind of coerced with the shorts and the hedge funds that are trying to short a stock, like, hey, this is what I'm going to release, this is going to go out, and then they short the stock. It's unfortunate that the public offering thing, you always got to take it with a grain of salt, because there is some default legal jargon that is in every prospectus. And on top of that, right now with AMC, it is so much volume that even if they did 11 million, offering, or 25 million offering, we're talking about 800 million plus in volume the other day. Like, that's just going to get sucked up in the first hour.
Yeah.
Right. So
it was more than their entire market cap, more than all of the shares outstanding. Right. Changed hands.
It's crazy. And I will tell you from my assessment right now, what I'm seeing, I don't think the naked short is as big as what people think it is, because they're being fed information from hedge funds that are trying to actually manipulate Wall Street Bets now.
Yeah.
In that group, where they're trying to feed false information and act like they are one of the group, the retail investors.
And they'll get away with it.
And they'll get absolutely. They'll get away with it. And it's unfortunate because they're preying on people who don't do their own due diligence and research and learn what's going on. You have people who are so reliant on somebody they see being the expert, and it winds up being that expert is an expert, but they're an expert at pulling the cloak, the veil, right? And so it's from what I see, I don't think the naked short, and this is just my own personal assessment of it, the naked short is as massive as they think it is, because I will tell you, and again, to kind of do comparison with Microvision, you have Microvision who they're shorted like, I want to say it's around like 40% of the float, where AMC is not. And you have Microvision where it's like a 30 approaching 40% lending fee on borrowed shares, where with AMC it was only like 10%. It was actually single digit percent prior. And it's just if that were the case, if the fear was it wasn't going to pull back down enough to make it worth their while, you would probably see AMC's fee go really high. I think because that shorting wouldn't do anything because there was so much volatility and volume, but it's not. And so there's just too much writing on the wall that leads me to believe I think some people are being fooled, and it's not the hedge funds,
Right, it's not. No. We actually played that clip, I think, from 2007, where Jim Cramer was bragging about passing off false information on Apple and all of the easy targets that he had.
Oh, yeah. Absolutely.
It's sad and it's scary. Like, you really have to sift through all of the BS to figure out what's true.
Right.
And not react to something. And I think that, like, you said 40% of the float shorted on Microvision. They're probably an easy target because they're not covered heavily by CNBC and Bloomberg.
Yeah, the only time they popped up was when it got labeled as a meme stock, and it drives me nuts because they're not a meme stock. What happened, and I will tell you, I mean, I'm guilty as charged as well, is that when all this stuff was going on with AMC and GME, a lot of us in the Microvision space, like, we're like, what the hell? Like, we have a company here who is creating a groundbreaking product, and they have value. And so we were actually on Wall Street Bets saying, guys, Microvision, bring some money this way. And it's just like, because we knew how much value is there. And we were trying to get people to like buy into that, bring money this way. You're not gonna regret it. Well, unfortunately, when you do that, you tend to welcome the not welcomed crowd into your bar. And we also started to get kind of quarantined off with these meme stocks, these Wall Street bet stocks, because of our own accord. And we got labeled as a meme stock, and it's not. And so, yeah.
No, you've got, in the meme stocks, there's probably some future blockbusters.
Absolutely.
Absolutely. Like I think GameStop maybe, and Microvision is kind of working towards the future.
Mm-hmm.
So it's definitely not that.
No. I see BlackBerry, I think, and it always makes you laugh because people are like, BlackBerry? Like I thought they disappeared, but BlackBerry's is going to actually, they're gonna reveal some game changing stuff in the coming months.
Really?
People will see. And then AMC, I'm telling you, AMC, their model to really help themselves. I will say this. First of all, AMC, by a reopening, right? A pandemic recovery or reopening stock, they're going to get a lot of business. People are itching to go see movies just like they are to go to the mall and spend, right?
Yeah.
Well, if I'm telling you, keeping a pandemic in mind, if AMC were to start to create drive-in movie theaters, they would add to their portfolio, and they would grow. It's not only the nostalgia of drive-ins, but it's also the advancements in technology with video and audio that they could bring to an outdoor space. A drive-in movie theater would totally up that game. And you also have prepared yourself to weather through some sort of pandemic, right?
Yeah.
People need to be spaced out.
We've got one right down the street from us. Well, about 15-minute drive.
Yeah.
And we love it.
Yeah. We do too. It's great.
It's so cool seeing all the old ads, like, because they still play like the old commercials from like the 50s and 60s.
Mm-hmm.
Yeah.
Yeah. It's interesting. It'll take you back.
Yeah. Speaking of the reopening, I mean, I was just at the mall yesterday. We had to get my girlfriend's phone fixed at the Apple store, which I don't think that Apple. I don't think they're getting enough credit for their stores reopening and.
Right.
I mean, I know that the shutdown, everybody went out and bought Macs and iPads and stuff like that and had to work from home.
Right. Those stimmy checks, man.
Yeah.
Screw food.
But it just, I think that they're going to be able to build off of that. They just, opening the new store. I mean, that mall was packed.
Yeah.
Just slammed. And weird because prior to COVID, there was nobody at that mall. Malls were empty.
You thought it was going to be the end of the mall. Right?
Yeah.
I mean, they were going away.
Yeah.
But there is definitely something to be said about the social interactions and just the environment itself of a mall. And I think, the pandemic, understand what I'm saying here. The pandemic in a good way kind of showed us what we actually are capable of doing and performing and pulling off without needing to go out to places or be in person, right? However, it also revealed to us how important it is in some aspects, even many aspects, to go out and be places, right?
Mm-hmm.
So you're gonna find this hybrid, this reinvention of business, right? We're already seeing that of how business is done, but you're also going to see this revitalization of spaces, these social spaces, but also a reinvention as well of how those interactions will go. So I say invest in REITs, anything that's a commercial mall property. REITs is a way to go coming out of this pandemic.
Yeah, I didn't think it would be. And then yesterday's trip to the mall. Yeah. Yesterday's trip to the mall, that changed me.
It's just like, wow.
And then it made me want to go to the mall. I've never wanted to go to the mall in my life.
Yeah. Man.
I was like, I've really got to come back here after. Yeah. So, Yeah, that was an interesting trip to me. And then not only that, but I mean, I had read some statements about how business travel wasn't going to come back, and that was basically dead. It was all going to be done over Zoom. And then a few weeks ago, we had at my place of work, we had a corporate visit, and every other corporate visit that we had prior to the pandemic, it was in person, and we would panic and freak out and make sure the place looked brand new and everything was in great condition. Yeah. And this time it was a virtual visit where we put them on an iPad and wheeled them around and had them see the things we wanted them to see. So it wasn't, a big freak out. But I think that there's a lot of CEOs and people higher in the business community that understand that, and they see the importance, in my opinion, of business travel, and they're ready to get back on the road.
Yeah. So what I take on it is I think it's going to be a honeymoon phase. I think you're going to have this you're going to have people who do want to get out because being cooped up, right? Mm-hmm. And there's a lot of studies out there showing that people are getting more eye strain and ergonomic issues doing these video meetings, because you actually tend to try to do more eye contact and longer eye contact than you normally would in person. And so, in more attentiveness in certain situations, because you have to, in such a small space, that you're attentive. And so you have that little issue, that nuance. But I think what will happen is you're going to get this hybrid where you will have the people that are in person, but you will start seeing it be an option.
Yeah.
Do you want to come in person or virtual? And spaces will be set up to accommodate. I think that's kind of where I see it going.
Yeah, well, I mean, the airlines that haven't quite reached their pre-COVID highs are the ones that were centered on the business travel. United Airlines and Delta. I do like both of those. I see the airline business as very narrow moat business.
Yeah.
But I wouldn't mind a play on Delta. I do think that you're probably going to get a better deal on this, just looking at the chart, probably in the next week or so.
Yeah.
But that would still be my pick. I think I mentioned that last week on our show as well. But another reopening play that I think hasn't gotten the attention necessarily that it deserved was Lululemon.
Yeah.
And they reported their first quarter earnings today. They had revenue growth of 88% year over year. Earnings per share was $1.16. Expected was 91 cents. Revenue was at $1.23 billion. Expected was $1.13 billion. 23% revenue growth in North America, above 40% international revenue growth. That was led by sales growth in mainland China. They are building more stores. I think they actually mentioned that they built 2 stores during the pandemic, so they were actually building 2 more stores during that.
It's just so crazy to me, because they're just I can't wrap my head around Lululemon, how that. Well, you had a lot of people who were cooped up and wanted to spend money on their retire, I guess.
Yeah. Well, it was a lot of stay at home athletic kind of wear. Yeah. And I think they benefited from that.
That's so weird.
I don't really. I'm surprised they're not a little bit higher than what they are. I don't think that I really like the price of Lulu above $300.
Yeah, because I mean, what gets me is I feel more it's trying to venture into the high end athletic wear, luxury athletic wear, right? Mm-hmm. You're paying for the quality, and the reality is, I think they're just they're doing a really good job at marketing the quality, because the end of the day, they're manufactured out of the same shot, the same place that makes, I don't know, Nike, whatever, right? Or some other workout, Reebok, athletic wear. It's the materials are just, they chose a little bit different material and they have a little bit different design and color palette, and that's what they went out with. But they've appealed and branded themselves to being this higher quality product. I think the product itself is overvalued, which then in turn rolls to the market cap, the value of the company. Because I don't get it. Yeah. I really don't.
No, I mean, the PE ratio on this is 71.
Wow.
And that's very high for retail apparel.
Oh, yeah. It should be around 11.
Yeah, so you're thinking, like, I've been one that has thought recently that the scare over interest rates and stuff like that, I thought it was a little bit overdone. But rising interest rates, like that's going to hurt companies with those high comparable PEs faster than it will anybody else.
Yeah.
And that's also, I mean, that's why they've probably been sideways for quite a long time. I actually recommended this stock a couple of years ago to my buddy, but it was at like $215.
Yeah.
So, I mean, if you can get it down into the 200s, I think it'd be fine. But over 300, I'm not buying it right now.
I'm with you. Because it's hard for me to understand a company like this as so valued in a $300 range, and I'm just thinking about their competitive market space. Like
it's very competitive.
Yeah, but I'm just thinking let's go back to it. You have Reebok and Nike who sponsor sports like baseball, basketball, football, athletics. Who is Lululemon sponsoring? Where are they getting that exposure, that market? Because it has to do, it's the psychology behind it. Because a lot of these boys and girls out there, they want to wear Nike, Adidas, Reebok, these brands because they've watched their favorite athletes wear it for years, right? And I'm thinking to myself, okay, Lululemon, because your aerobics instructor at your local gym wears Lululemon? Where are we getting the connect of value?
Yoga?
And the role?
Maybe? I mean, Under Armour's everywhere.
Under Armour, right? That's another one. Under Armour's huge.
Yeah.
They branded really well. Actually, Under Armour's another one that branded well.
Yeah. Okay, well, I can't find a way to transition into this, but that's okay. One of the things that I wanted to talk about, living the investment lifestyle, okay? I was talking about hashtag hoard your money, and you mentioned on the Money Vikings, hodl your money, which is so much better. It's so much more able to go viral, I think. So hashtag hodl your money, all right?
I love it.
Investing shouldn't be just about what you do with stocks, okay? You should make it a lifestyle. Investing should be your lifestyle. There's room for us, the chinchilla pickers. There's room for the Money Vikings, and there's room for Dave Ramsey. Which I will say, I think you guys have that. Like, you guys do have. Like, I look at your show and ways to triple your net worth in 10 years, and you guys cover a lot of very good things as far as saving and stuff like that goes too. So,
yeah, it's it really I think one thing people need to consider is that it's not all about this bread and water lifestyle, right? It's not that very dry thing. It's okay to splurge here and there. That's not a problem. It's the big thing is this, and my brother's said this so well, and it's always a quote of Warren Buffett is, building wealth really is, it's about having more assets than liabilities.
Yep.
And there's a newer generation, coming into this world and becoming adults that is all about impulse. It's all about image. It's all about one-upping, keeping up with the Joneses. That's what they do, right? And it's this fake, TikTok, Snapchat world that they live in where, okay, I need to get the Gucci, and I need to have a Tesla, my picture of the Ferrari and Lamborghini. I need to have a picture of this, and then I need to put this on media because people are going to click a button that gives me a thumbs up or gives me a heart. That makes me important. And that mentality and mindset, I'm sorry, it's just stupid.
Yeah, I mean, you could
bluntly put it that way.
You could start looking at, like, when somebody posts that picture of that Lambo or whatever.
Right.
That, I mean, it's a symbol of wealth. Like, people are doing this.
Right.
Like, look how much money I have. But you can also look at it as in, look how much money that person doesn't have anymore.
Right. It's the symbols of status. It's these symbols of wealth, and people want to show other people that they have status and wealth, and it's wanting to be put up on a pedestal and be envied.
Yeah.
And create jealousy, and it's sad because I gotta tell you, at the end of the day, what I worry about the most is right in my house. It's my kids, my wife, myself.
Yeah.
That's, and then I branch out to my family, right? It's my family, and that is what is most sacred and important to me. And they know me. I don't need to send them a picture of me in the front of a Lambo.
Yeah, who are you trying to impress? I mean, people you don't know? Yeah.
Yeah. Hey, we'll go vacation somewhere, together. We'll go on a trip. We'll do whatever. But it's like, I don't need to do these things to try to have them admire me. We'll just roll up in our regular SUV to the family party, and that's it. But it's knowing to have that financial freedom of saying, hey, let's go out to dinner tonight, or hey, let's buy dinner tonight. I don't feel like cooking.
Let's do it.
Or, you know what? I need to get some new clothes. These are getting just ragged, right? And it's the comfort and ease of knowing that you can go and do that, but not be like, hold on, I got to look at my bank account first.
Yeah.
I may have to wait the next pay period, or maybe I'll have to wait a couple months before I can do that.
Or your air conditioning goes out, and then you need to buy a new air conditioning.
Right. It's funny. It's like those things, right? And my mom said to me a long time ago, and I was, because we'd asked, and I remember this. It was, when did you finally know that you were financially stable and doing well off? And she said it was the day that they had to get tires on their car, and they didn't have to make a second guess about it, and they knew they could just go and make that appointment, or just go and get tires changed in their car. And it really does kind of get to that point of, like, those everyday things that really are more important than the Gucci bag, right? Knowing that you can actually live comfortably and handle the emergencies, the rainy days, right? To handle those things that come your way with ease and get through it. That's to me, the bigger, more important picture. I hope we convey that message with what we do over at the Money Vikings, and then what you guys do here with Chinchilla Picking is like conveying the message of wealth isn't about the image or the status.
Right.
It's about it's the comfort level that you have in life financially.
Yep. Well, me and my girlfriend were watching the A&E biography on Warren Buffett a few months ago. And it was so funny because here's this guy driving his very modest car away from his house that he paid $55,000 for years ago.
Yeah.
And in his cup holder is, I think it was $1.80. That's what his wife budgeted for his breakfast that morning.
Yeah. McDonald's, man.
Yep. He was rolling up to the McDonald's window.
So egg McMuffin. That's what he gets in his Coke.
And I was reading this book. It's called The Austrian School for Investors. And the author talks about a way to look at it when you're talking about like consuming products, the things you buy, right? Mm-hmm. You can walk around. Most people can walk around their houses. They'll see things that they bought that they don't really need. Maybe you had like 2 juicers, an extra video game system that you didn't really need. Things that like literally like you can't resell them. They're not going to gain any value.
Right.
And a way to reorganize what you consume is to consider your consumption as an investment as well. Right. So if what you're buying is going to add value to your life, then that could be a good thing. And it could be something that like you buy, like art, for example, that could gain value in the future. Or, maybe instead of buying pressed wood furniture, you're buying antique furniture that will at least maintain the value. But also, you're, instead of going and buying junk food, like, a bunch of, potato chips or whatever, you're buying nutrients that will add value to your life. And, as you mentioned, you don't have to go through your entire life without splurging every once in a while, because those things do add value too, because they make you temporarily at least happy. But with your expenditures, you're focusing on the long term.
Yeah. And I mean, one could even argue that buying a special set of, I don't know, chef knives for your kitchen, right?
Yeah,
has the value. Because I mean, my argument definitely to some of what that perspective is that we need to also value ourselves.
Yeah.
And I don't want this to sound like I'm being contradictory to what we were just talking about with the Lambo and whatnot, but we need to value our satisfaction, our comfort, and enjoyment in life. And I don't necessarily think that is found through always finding that everything has to have equity, right, built out of it. Not everything in life can be an asset, and I don't think that people should try to find ways for everything to be an asset, right? So and hopefully I'm on topic with what that book,
yes,
what that is saying.
You are.
Yeah, and so it's like that's my argument to it. Is like I think it's I really feel like it's okay every once in a while to splurge on something, to just kind of be like, this is cool. I like the higher quality, the higher value, like the way this feels to me, the way it looks to me. But back to my prior point is, don't do it for the purpose of other people.
Yeah.
Right. This should be for yourself.
Yes.
And this should be something fits a little better on you or feels a little better. Like that's kind of where I'm at. So I agree partially that you kind of want to, it's nice to get things that can be assets, but I don't think should be your only purview.
I've had my days where I've just had like the worst day at work, and you know what? I'm going to go and I'm going to spend that extra money on a Starbucks frappe because it's going to make my day better. But I don't want to be in the habit of, going to Starbucks every day.
Oh, yeah. Yeah.
But yes,
I was there at one point.
It's the small things, though, right?
It is those small things. And it's good that you say that, because that is one of the big things that I think we always talk about is, it's being smart. It's not just about investing. It's being smart with what you're spending. And it's like, can you forego the $5 cup of coffee? It's like, is that truly going to make the difference that you got it at Starbucks? And, people can blow easily $50 to $100 a week on Starbucks. I've been there. Yeah. I know that firsthand. And so it's like,
especially when you're buying for a family,
right? Yeah, absolutely. And it's like, to do that over time. Like, think about it. I mean, let's just say it was $100 a week, 52 weeks in a year, right? $5,200 a year, just going to Starbucks. Imagine rooting that out of your equation completely. You've just given yourself $5,200 a year that you could go invest in the market and put into Starbucks investments and let it grow.
Yeah. Buy the stock.
But No, Starbucks stock. Yeah. And so that's my thing is like people. I talk about this a lot, and especially even when I do like charting analysis, technical analysis, charting videos, is that I talk about when we're investing we're watching the market during the day, and we're focusing on the stock and the movement, the price movement, where it's going up and down. We're looking at a 1 minute or a 5 minute or a 10-minute time frame, right? But we're not actually stepping out, zooming out to the bigger picture, to what the days and the weeks and the months look like, because they can tell a totally different story. And it's kind of that same thing, is that when we're spending money, we get so caught up in the right here and the right now. And, this Starbucks coffee is so good. It's convenient. I'm right here. Okay, $5. Here it is, right? The next day, I'm here again. It's so good. It's so convenient. $5, right?
Yep.
It adds up. And we don't step back. And this isn't just, right, the stock charts. This is our life. We don't ever step back to actually evaluate our bigger picture of what we do in our day in and day out, where we could say, you know what, I'm not going to have Starbucks today. I'm actually going to make a cup of coffee at home and save that $5. Maybe I do that for a week. And that's the kind of the point, is it's about reevaluating, taking that step back and truly actually reevaluating your actions through the day, and seeing where you as an individual can be a little smarter about what you're willing to throw money down on, instead of actually throwing it down on yourself and investing in yourself, right? And saving it. And that's the bigger thing.
I agree. That's all I had for topics today. Did you have anything?
No, that's it, man. I really appreciate the opportunity to come on. It's always good to kind of you get into the different settings and the different feels and the different intimacies and whatnot. So I love what you guys are doing, and just keep it up. I like being a part of this stuff, and it's about the bigger picture. It's like kind of what we have to offer retail investors, right? Because we say this all the time. I'm not a investment or financial advisor, right? I have ideas and things that work for me. I'm here's what they are. Maybe they'll work for you, and if something does, awesome. If it doesn't, hey, we tried. And that's kind of that's the perspective, the philosophy that I go with. And
this is still a new show, so we're still ironing out the kinks here. It was very good being on your guys' show. I love doing it, and
Absolutely.
I would love to do it again sometime. And we'd love to have you back on. Definitely, it was great having you. All right, well, I appreciate it. Have a great day, and everybody have a good night.
Cheers.
Hey, Chinchilla Pickers. We have many friends out in the podcasting universe, and I would be remiss if I did not mention them. The Money Vikings. You just heard Bob on this show. It was a great conversation with him. Thoroughly enjoyed having him on. Do us a favor and do yourself a favor, and go to themoneyvikings.net to check them out. Also, I would be remiss if I did not mention the Bargain Bin podcast. This is where Dylan and Cameron, the two hosts, talk about greatly made movies poorly. Sorry, I wrote that down wrong. They talk about poorly made movies greatly. Check them out. They're hilarious. They're side-splitting. As well as the Chewy Piranha podcast. If you like podcasts, those are all awesome. There's room for us and them in your lives.